Next question. A starts business with cash rupees 5,000. A purchased goods for rupees 1,000. A sold goods costing rupees 800 for rupees 2,000. Closing stock as on 31st March 2013 rupees 200. Before I start solving this question, I would like to explain you the separate entity concept. Under this concept of accountancy, the firm and the owner has got separate entity. Suppose A starts business with cash. Suppose he decides to run a bookshop. So in this way, A will be a different person and the firm will be a different person. Both have got different identities and entities. A is the owner and Classic Bookstore is the firm. A is the real person and the firm is an artificial person. It means A brings cash from his home and delivers to the firm, and then firm keeps the cash for the future transactions. If the goods are purchased or sold, they will be sold and purchased by the firm, not A. Of course, actually A is helping the firm to buy the goods and to sell the goods. But in accountancy, all goods are being sold and purchased by the firm, not the owner. That's why it is called separate entity concept. So let's complete this question. First of all, draw the format of accounting equation. On left hand side, capital, second column is liabilities, and on right hand side, first column is cash and the second column is stock. So A starts business with cash. It means the capital of the firm will be 5,000, liability 0, and the cash will be 5,000 and stock 0, because the firm has got now 5,000 and the firm has received this money from A, I mean to say the owner. Now the firm has got rupees 5,000 cash and 5,000 as capital. Capital basically it's also liability for the firm to the owner. So next transaction, purchased goods rupees 1,000. So what will happen if the goods are purchased for cash? It means the firm will pay cash rupees 1,000 and the new cash will be rupees 4,000. And the firm will get the new asset in the form of goods. And that column will be plus 1,000. It means 4,000 plus 1,000. And on capital side, the previous capital was 5,000 and the new capital will also be 5,000. There will be no change. You know, the capital is increased due to profit and decreased due to loss. But if you buy the goods or if you purchase the goods, there will be no change in the capital. The new transaction, sold goods costing rupees 800 for rupees 2,000. What it means? The firm found a customer and the goods costing rupees 800 was sold for rupees 2,000. It means the goods were sold at a profit of rupees 1,200. It means the firm has made a profit of rupees 1,200. You know, whenever there is profit in the firm, that profit is added to the capital. So the new capital will be 5,000 plus 1,200. That will be 6,200. And look at the asset side. Previous cash was 4,000, now plus 2,000, because the firm has received cash from the customer of rupees 2,000. So the new cash will be 6,000. And the goods or stock, that will be 1,000 minus 800, because the firm has lost goods of rupees 800 that has gone to the hands of customer. So the goods lying at the shop or the firm is now only rupees 200. So the new equation is 6,200 is equal to 6,000 plus 200. Liability is equal to 0. So be careful. The value of the goods is also called stock. Goods or stock is the one and same thing. Stock means any item which is available in the firm for the purpose of sale at profit. So now you have got the last equation, that's equal to 6,200 is equal to 6,000 plus 200. This last equation should be presented in another format, and you know that format is called balance sheet. Balance sheet always tells about the financial position of the firm on a particular date. So you will write down balance sheet as at 31st March 2013. On left hand side, capital 6,200, this has been taken from the equation, and on right hand side in the column of assets, cash rupees 6,000 and stock rupees 200, and total 6,200. This is the balance sheet. It means this balance sheet tells about what you own and what you owe. At this moment, the firm owns rupees 6,200 and firm owes nothing, but capital is rupees 6,200.